This RealAg Radio podcast is brought to you by Economics. Everyone has questions about their farm. From general inquiries to in-depth fertilizer questions, find straightforward answers at nutrien-economics.com.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Wednesday midweek hump day edition of the show. Hey, thanks so much for making RealAg Radio and Rural Radio 147 a big part of your work day. And as always, a big shout out as well to everybody listening out there on the RealAg Radio podcast. Well, today's show, we have a show sponsor, and it is brought to you by AgExpert. Yes, our friends over there at Farm Credit Canada. So brought to you today by AgExpert, software for field and finance. It's not a hunch when it's backed by facts. Uncover your facts at agexpert.ca/farmwithfacts. And we're going to hear a little bit about the AgExpert software platform from Sarah Boychuk. She'll be with us here in a little bit. We're also going to hear today from Brian Voth of Intellifarm. Now, we had Brian on the show back in August. He was a little bit of a bear. Yes, I think I even called him like sort of an unhappy yogi, if I remember right. We'll find out how he feels about this market right now, a couple months later. And is he seeing some reason to change some of his viewpoint, or is he still a little bit down on where things are headed here in the commodity complex? We'll talk to Brian Voth about all of that, maybe get him a bit of a thought on some of his basketball picks for the year ahead, as well as he's a huge NBA fan. We'll also have time today for the top ag news stories of the day. If you have any feedback on today's show, we'd love to hear from you. You could send me an email, shaney@realagriculture.com. You can also find us across all the different social media platforms, or there is always the opportunity to give us a call on the RealAg feedback line, 855-776-6147. Got an email here from Dwayne, who says, "Hey, Shaun, just heard your reply to an email about miles versus kilometers. On a recent trip to Australia for a trade show, I was reminded of how mixed up we are. It took me a while to wrap my head around equipment widths in meters, capacities in liters, rates in kgs per hectare, and yields in tons per hectare. People would ask me why we still use imperial measurements in Canada even though we are a metric-based country. Of course, I would explain that we only changed in the 70s, and especially in the West, we were surveyed in miles, thus the reliance on acres and quarter sections. But my favorite story was to tell them about spraying." And here Dwayne continues the email, and he says, "Some older farmers will still spray volume in imperial gallons per acre. Most spray in U.S. gallons per acre, as most of the equipment comes from the U.S. We calculate chemical application rates in liters per acre. And of course, because we are officially a metric-based country, the legal labels have to be all metric, so everything is documented in liters per hectare. But the industry provided crop protection guides. The Blue Book here in Alberta uses acres. Thank goodness most of us grew up with these units. Someone coming in from the outside would be lost." Hey, I appreciate that email, Dwayne. That's my point. It's very confusing. And the people that really impress me the most are the people that are able to like easily do those conversions from one to the other. Like my dad has this like amazing math mind, and it drives me nuts on like when we're trying to figure out gas prices, and this is where we stay in the metric system because we measure mileage on like by fuel dollars per liter. And then when you do the dollars per gallon in the U.S., my dad is able to just do that math so fast, and it just drives me nuts because I have to pull out a calculator for absolutely everything. So, yes, we are very confused in Canada when it comes to this conversion and this real one part of the equation will be metric. The other half of the equation will be imperial system. But kind of makes us special. That's right. Yeah. Okay, let's take a break. When we come back, we're going to talk about the markets. And Brian Voth from Intellifarm will be with us. We'll find out if he's still a bit of a bear or if he's found himself a little bit of bull. You're listening to RealAg Radio, brought to you today by Farm Credit Canada and AgExpert.
Proven Seed is at home in your soil. With the widest seed portfolio in Western Canada, our seed is developed and tested on and for your local acres. Our hybrids and varieties are tested by hundreds of growers, so we know how our seed will perform in your local conditions. Better returns start with seed that belongs where it's planted, and this seed belongs here. Secure your seed today at your local Nutrien Ag Solutions or visit provenseed.ca to learn more.
It's now time for a product spotlight, and today we're talking to Vantage Ag, and we're joined right now by the president of Vantage Ag. It is Paul Sinkovich. So what makes your new liquid fertilizers so unique for both Canada and the U.S.?
When our liquid fertilizers are reacted, we add a process that makes the particle size of that nutrient 1/3 to 2/3 of a nanometer. These tiny, tiny particles are only 30 to 40 times bigger than an atom. What we find when these nutrients are sprayed on a plant, any plant, these tiny bioavailable particles are quickly absorbed by the plant and within a couple of days are throughout the entire plant and being metabolized and used by the plant. Crop safety is impeccable, and with this new technology, we can now feed plants what they need through foliar feeding more than we ever thought possible.
We've been talking to Paul Sinkovich. He is president of Vantage Ag, and the product is Reacted Quantum Ag Technology. Paul, thanks so much for joining us here today.
Thank you, Shaun.
And welcome back to RealAg Radio. Make sure you uncover your facts at agexpert.ca/farm with facts. Today's show sponsor, Farm Credit Canada and AgExpert. Let's dig into the markets. We're joined right now by Brian Voth. He is the CEO of Intellifarm based out of Manitoba.
I'm good. How are you, Shaun?
I think kind of better than the overall markets. I think. I don't think that's hard. I'm having a pretty good day. I interested in your overall 100,000 foot perspective here as, you look at a number of the different charts. Pretty much a slide, a lot of disruption. Of course, the war in Ukraine is still going on. Of course, we got some terrible situations happening in Israel. That's also a geopolitical issue. But as you look at this overall market here right now, what is your sentiment? What do you see happening next year?
I'm still kind of recovering from this bad news bear nickname you gave me there last time. But,
I did. That's right.
My sentiment really hasn't changed. And unfortunately, now I'm kind of looking at it from a two-pronged approach because my background is technical analysis. And so every week I write a report for clients on going through all the different grain charts along with currencies and crude oil, that sort of thing. And it was concerning to me when I wrote the report this last weekend, how many negative signals were showing up on these grain charts. And this is after we've already slid for the last, month, two, something like that, that now we're getting more and more sell signals showing up on these charts. And it kind of just reinforces, I know we've talked about this a lot over the last, 12 to 18 months. And, it's been weird for me to wrap my head around being as bearish as I have been, because I am normally the generally optimistic, positive one. And for the last 12 to 18 months, that has not been the case. And I say it unfortunately because there is still a lot of room underneath us on these charts too. As much as a lot of people get caught up in, we've already dropped $1 or $2 a bushel or whatever since the summer highs, let's say. It's like, yeah, but look at where we are relative to 10 years ago or the last 5 years, excluding the last 2 years or 3 years, let's say, like post or since COVID. We are still at abnormally high values on commodities, period.
Now, my understanding is funds are net short across the board now.
They have established a short position on, I think, pretty much everything as of last week.
That's what I don't like. That's because we know we love those funds when they go net long and they push the market beyond some of the fundamental prices, which, you know, you could argue is what happened on the upside. It also happens on the downside. And so now we start to look not only the net short, but how aggressive do those short positions become? That to me is a little bit of concerning signal here in the short term.
It is. And although I can take a contrarian view on that one as well, because of the fact that they are now short, should something else happen, you know, another war or whatever it is,
we short squeeze them.
They are going to have to cover off these short positions. So there is the contrarian view on that particular note, that something could happen that leads to a short covering rally because they get spooked and they want to get out of their short positions, which means they have to buy them all back now. Now, if something like that happens, likely it would be a short-term technical driven blip, not the start of a new uptrend again. And I think that's an important thing for farms to realize, is that we are in an overall downtrending market, and moves back to the upside now are selling opportunities. They're not the start of a new bull market again.
Are we? It hasn't been exactly a sharp decline though. Because as I look at the chart, if we're like in a sleepy sort of like lull, like sideways sort of slipping, that I don't know. When I look at the November canola as an example, that's what I sort of see. Is that fair or not?
It is. You know, like, you know, when we peaked out back in July, let's say November canola was $8.50 and today we're at $7.04.
Yeah.
And then the really unfortunate time about when markets started to slip in early to mid July is, at that point, nobody was adding grain sales because we were in the midst of a lot of drought. Most clients were actually lowering their budgeted yields from what we had originally worked off of.
Right.
You know, in a lot of cases, it was probably by 20 to 30%, maybe a little more in some of the extreme areas. So nobody was looking to add sales at that point, which is too bad because, you know, at that point you could have sold probably $19 new crop canola. And today we're down at 15, 16, something like that. Maybe 17 out to next spring kind of thing. But, and then the bigger, to add insult to injury, I guess, to an extent, is that yields have been substantially better than anyone would have expected them to be.
Yeah, that's been kind of the touchy subject that, you know, it definitely seems to be the pattern, even though expectations were very low in some parts. Because I think you got to phrase that appropriately. We don't have like, oh, hey, like we thought they were going to be below average and wow, we're shocked they're above average. It's relative to the expectations. And why that's important is those are the expectations that get put in from a supply side into the balance sheet that the market then reacts to when we look at some of the demand that's out there that's been, you know, somewhat weak and continues to be so. That's why that relative to expectations is important. Yes, some parts yield still really low, not great, but better than we thought, and that's the hard. But
part. It was 20 bushel canola instead of 15.
Yeah. That makes a difference.
It was 33% better than expected.
Yeah, I know when you put it like that, it really does make it.
I know. And that's true. Like there was just some absolutely shitty yields out there. There's no question about it. But even there, like you said, it was better than what a lot of farms had set themselves up to expect.
Okay, so now you're not the first analyst that I've talked to as of late that is definitely more on the negative or the concern side here, where we go from here. That's a common thought. What if, you know, to say build the contrarian point of view, like when everybody's going that way, I'm going this way. Can you build that case here right now when you look at some of the fundamentals at all?
Like from a fundamental standpoint, I can way easier build a case for the oilseed market.
Okay.
For soybeans and canola, just because of the tightness on those balance sheets relative to the grains anyways. Canola, we're still going to have a tight balance sheet because demand has been good, particularly on the crush side. And we don't have enough canola to do our historical export program along with a full crush program. And by default, most buyers are going to satisfy crush demand because those crush plants can only do one thing, and they will limit their exports accordingly. Along with some of the expansions of these plants are going to be coming online here, starting this winter kind of thing. So there's going to be more and more domestic demand on the canola side, and that will have to come out of the export side. Probably not a huge deal because Canadian canola has just been overpriced since 2021 when we had none or very little.
Right.
So it's not that and I think this is an important thing to remember, is that it's not that we have to have prices go up $200 or $300 a ton to ration demand. The demand already has been rationed and hasn't come back the way we had prior to COVID, or prior to 2021, sorry, I should say. So I can see prices on canola staying, a little bit more optimistic or a little higher just because we are still in a tight balance sheet situation. Soybeans are similar. But there too, U.S. soybeans have just been so overpriced relative to South American that the demand is not so much that it needs to be rationed. The demand is just not showing up like it normally would at this time of year. I did see a note this morning that I think China had looked at buying some soybeans out of the PNW, and it was like 110,000 tons or something like that. So maybe we're starting to actually get to a point now where demand is starting to show back up again. And obviously, what happens in South America this winter with production and whatnot is a huge key part of this too, because if they don't have issues, then it's really hard to build any kind of contrarian view about higher prices on oilseeds.
When we come back here on RealAg Radio, brought to you today by AgExpert, we're going to dig in more with Brian Voth of Intellifarm and try to find out what scenario has corn leading this entire market complex higher. You're listening to RealAg Radio here on Rural Radio 147.
What's next for your fields? At Pioneer, delivering industry-leading genetics drives everything we do. From the scientists in the lab to our local teams with boots on the ground. We are determined to get there first. Developing top-performing products, proven in more growing conditions than ever before. Pioneer. What's next happens here. Visit pioneer.com/Canada to learn more.
There's a reason we call it the Corn School. Videos on everything from planter setup, weed control, field trial results, yield strategies, and so much more. The Corn School on RealAgriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF, Corn School episodes are available at cornschool.com, from RealAgriculture.com, or as a podcast from your favorite streaming service. Download the latest podcast today.
Your co-op grow team are your local experts because we live here too. Our agronomic specialists stay up to date with the latest research and technology to help support your entire farm operation. Talk to our team for advice tailored to your farm's needs. We have recommendations to help you optimize your crop yield and quality while enhancing the health of your land. Co-op, we're all growing together. Here for your farm, here for your family. Learn more at coop.crs/farm.
Let's continue our discussion here about the markets with Brian Voth of Intellifarm. Today's show is brought to you by Farm Credit Canada and AgExpert. Yes, make sure you check out AgExpert. It's great to have a handle on not only the numbers, but what the facts are, so you can lay out things like your budgeting and your operational, and you can really feed that communication amongst your entire farm team. You're going to hear from Sarah Boychuk of Farm Credit Canada and AgExpert here in the next segment. But let's get back to the markets. Everything always seems to come back to corn. But in order for there to be a broad reversal here, we really need corn to come through and lead us through that. I was once taught that wheat does not lead the market higher. That's like that is a false rally. That is not something to be banking on. As we look at what has happened to corn as of late, it definitely previously in the year bounced around quite significantly in both directions. Now has, committed to this slide kind of lower below $5, especially, if you look at the Dees contract. What do you see for corn from a demand standpoint now that we have a little bit better handle on yield?
I mean, at the risk of alienating every U.S. listener out there, I think it gets worse before it gets better.
Well, you're in that camp. Man,
do you remember that? Do you remember the number I gave you probably like a couple of times ago when we chatted?
Were you like in the 425 category, or did you have a 3 handle on your?
I was
were you a
380 guy. Yeah,
you were a 380 guy. Yeah. There's a number of people in that range of that 385 to 425 seems to be, if I was to pull out everybody that I talk to on a weekly basis or hear on Rural Radio or see on RFD TV, like there's a bunch of people in that range, which again, I can stick my head in the ground and say, like, I don't believe it. Or I could look at it and be like, hey, what is everybody seeing here? What do you think everybody is seeing?
And I think, again, I've been bearish for quite a while. Again, the thing to remember is that through 21 and 22, prices got way overdone to the upside. And that rationed a lot of demand. And this is across all commodities. This is not just what we're talking about. That rationed a lot of demand. And the thing about it, demand is really easy to lose or to shift elsewhere. It takes a lot more to get it back. And the other thing to keep in mind is, when you were talking $7 and $8 corn, what is that going to do to production? Well, of course, everybody's going to grow corn for $7 or $8 because why wouldn't you? It's basically a license to print money, right? So not only do you lose the demand, you oversupply, and now you've got way too much product around and nobody to buy it. So what has to happen to prices? They have to come back down. And, I've literally just explained 60 years of ag prices to you right there. That's why everything is cyclical. We go from too much to not enough, and the demand goes the opposite way. And then you find an equilibrium price. But that's also why after, that 2012 drought in the US and the high prices we had, we went into a sideways range on corn for 6 years, right, where, the bottom end was kind of in that 330, 340 range, and the top end was 390 to, there was some of the spike highs to 425 kind of thing.
Yep.
Like, we're not back to those. And I do think, those old highs, so somewhere between that 390, 425 level, that becomes the new lows going forward. And you basically go from a range here to, we'll now have a range here. If you look historically, that is often what has happened. But you got to also consider what happens on the input side, because inputs just follow according to grain prices, essentially. So you're going to go back, farms are going to go back to the same margins that we historically have had. We had a phenomenal couple of years, and I hope that farms, banked some of that and didn't just spend it all, because you're probably going to go into a period of some lean years again.
You're right. It just, the question though is how, if that's the reality, need those input prices to follow as quickly as the commodity price on the downwards. And it doesn't always happen right in sync in tandem. But if it's a year of adjustment for those input prices to come down, that's some short-term hurt for sure. I'm looking on that December corn contract with a 5-year chart. Okay. Mm-hmm. And just trying to get a sense of where we have been, relative to going back pre-pandemic. So, if you look at, what is pre-pandemic, kind of January of 2020, we're around that like 380. Now in 2019 in July, we were more like 450. Okay, so that's sort of exactly what you're talking about there. And like when the pandemic first happened, we dropped as low as like 315 or something like that.
Yeah,
even 303.
302. Yeah, say we held on to the $3 number, but barely.
We never found a two handle. It doesn't look like according to this chart. So,
$3.25. So about as close as you can get.
Yeah. Well, to go back to like August 10th of 2020 and just go super like buy call options galore. Yep. Oh my goodness gracious. It's like Back to the Future when Marty finds that sports betting book. Can you imagine the money you could have made?
I've always said if we could figure out how to market for farms in the way that, USDA or Stats Canada can go back and change numbers for the past 3 years, I would have.
Right.
I wouldn't be sitting here talking to you probably, but I'd still talk to you anyways.
Yeah, well, we would. we would for sure. So now, before we wrap up here, demand. That's kind of what you're watching here right now. What is the pace of buying of these commodities? And because that is one of the things. If there is an unexpected amount of demand, that sort of changes some of the equation here.
It does. And the problem is that the demand hasn't been there. That doesn't mean that that's going to be the way, all winter long or anything like that. But so far, demand is lacking. And again, if you go relative to expectations, you look at some of the demand numbers that USDA has penciled into the balance sheets, they are huge increases. And we're nowhere near pace to hit those numbers. And I'm more concerned on the corn side because you're talking, 2.1, 2.2, whatever billion bushel carryout. Like that's like corn is everywhere to go swimming in kind of thing. And we need that demand to show up. But even if some extra demand shows up, or, even if the yield comes down a bushel or two an acre, it's kind of a drop in the bucket right now. It's not going to materially change that balance sheet right now. Whereas the soybeans are a tighter side to begin with. So demand is a more finicky number there because, a slight increase in demand on the soybean balance sheet has a bigger implication to the bottom line than it does on the corn side.
There's not to look ahead of here to 2024. It could be a lot more attractive plant beans than corn.
It could, but here too, in terms of like you're talking about input prices and everything, we've been doing a lot of budgets with clients for 2024 already, and where prices still are today are still very attractive from a profitability standpoint. But again, I've harped on this for 15 years, and I'm still harping on this that. If you don't do a budget and you don't actually know what your break even is, you also can't tell me that, $4.86 or $5 or $6 corn or whatever is a good or a bad price because you have no idea. You have no way of referencing it. And if I'm right that there's more downside ahead, probably want to start looking at pricing 2024 crop already.
That cropping budget doesn't need to be like, you don't need to have everything down to the 100th decimal point, but no. Even if it's just broad and looking back at, historical numbers or, adjusting for current environment, like, I've done a bunch of Mind Your Farm business podcasts about budgeting from a financial standpoint, but the crop budget is a part of that. It's a very important component of the crop planning cycle. Why are like, I'm sort of lost as to why everybody, like why it's not 100% everyone's doing that.
Well, and partially I would say there is, a lot of farms have a lot of old money and it just was like, I think that at whatever, you can put whatever price you want in there. Yeah, I'm making money because how could I not? They don't actually know that. And it depends a lot on your farm. If you're a highly leveraged farm, then to me, doing budgets and knowing these numbers is way more critical than if you have no debt, because at that point, yeah, I could make some general assumptions and tell you kind of where profitability is going to be. And you're going to be so far above that line that it doesn't really matter. But the well-managed farms are definitely knowing these numbers and planning around it because they have to. And you look at, it's always interesting to me because you look at any other business. I mean, I own a business, you own a business. Do you just guess at where your numbers are for your business?
Oh, I try. Because every time there's the first three letters of assume.
Yeah.
Seems to be what always happens when I make those, assumptions. And
I am a numbers person. So I know my own business's numbers, to the decimal point.
Yeah.
But and maybe that's why I'm so passionate about drilling this into clients that, no, we need to do these budgets and know where you're at. I've always said, it's so many farms don't like doing budgets. And the bigger problem I have is the ones that just have no interest in doing them, period, and don't care. Because at that point, I don't know who it was, whether it was Danny Kleinfelter or whoever said, the average farm is just a business that goes bankrupt over the span of 40, 50 years.
Know your number.
And yeah, exactly.
Know your numbers. That's
and plan accordingly, because at the end of the day, nobody knows where the highs are going to be. Nobody knows exactly when the market's going to rally or drop. But if you can look at, hey, I can sell soybeans for $14 or $15 or whatever the number is, and I can pencil in, a 10%, 15%, 20% ROI. Yeah, there's some assumptions there on a yield standpoint, obviously. But if you're going off of long-term historical average yields for your farm, then at least you are setting yourself up for success by knowing, okay, I am in a profitable position. At the end of the day, that's what matters.
Yeah. As you're saying that, I'm thinking of you need to look at your financial situation relative to the marketing and your profit margin. You need to eradicate complacency. And when prices are as lofty as they have been, I'm post tense, but like you said, there's still some money to be made in 24 according to where prices are right now. The second that you're complacent in some of this, because hey, on the way up, there was a period there in fall of 2020, as we were talking about here, and parts of 21, where it's pretty easy to be a marketer. The market just keeps going straight. It's like a hockey stick. But now we're in a tougher environment. Margins can be positive. They are tighter though. And so we need to make sure that we push out the complacency. And this is where we really, really kick out some of those bad habits and really grind it out from a financial standpoint of, hey, know your numbers. So I think it's pretty savvy advice, no matter which direction you think the market is headed. We've been talking to Brian Voth of Intellifarm, based out of Manitoba. Hey, Brian, if somebody wants to get a hold of you and find out about some of the Intellifarm services, how do they find it?
Best way is go to the website, intellifarm.ca, and you'll find all of our information there, contact information. You can shoot us a message there.
Awesome stuff. Hey, thanks a lot, man. I really appreciate it.
Thanks, Shaun.
I know you're probably saying, why do you bring on these analysts that just want to poo-poo the market and say it's going lower? I think it's going the other way. And hey, it takes two sides of a trade to make the market work. If you disagree with Brian and some of the things that he said here today, send me your thoughts. Give me that other side of it. What do you see that he doesn't? I love the debate and the discussion. It's very, very fascinating to me. And it helps all of us really get a better understanding about what all the different viewpoints are and which direction and what strategy fits into the direction of this market as we try to figure out 23 crop, and we talk a lot more about 24 crop ahead. You can send me that email, shaney@realagriculture.com. When we come back on RealAg Radio, we're going to hear from Sarah Boychuk. She is with Farm Credit Canada's AgExpert. We're going to learn a little bit more about that program, some of the benefits, and really dig in on it. You're listening to RealAg Radio, brought to you by AgExpert.
Dedication. Watching the sunset over your crop is one of life's simple pleasures. The anticipation of it all. We know that feeling. Introducing our new Airflex NXT, our best honeybee header yet with the closest cut ever. Light, fast reacting, and infinitely adjustable. More yield, less time and work. Airflex NXT focuses on the future. What drives your next? Visit honeybee.ca or contact your nearest Honeybee dealer.
What were the issues in your fields this year? Did you do a soil sample? What is your soil sample telling you about some of the nutrient issues that you might be having going into next year? What herbicides did you use? What residues you might be concerned about? What weed issues did you have? What crop residues did you have? How well do you know your fields?
Get the answers to all the questions you have about your pulse crop at the Pulse School on RealAgriculture.com.
And welcome back to RealAg Radio. It's now time to do a product spotlight with today's show sponsor, FCC AgExpert. And we're joined right now by the product specialist for FCC AgExpert in Regina, Saskatchewan, and it is Sarah Boychuk. Sarah, welcome to the show.
Hi, thank you so much for having me on.
Yeah, today we're going to talk about AgExpert's Solid and, some of the simple user-friendly tools and how that can really engage all ages involved in the farming operation in the success. So let's talk about some of the experiences that you have seen customers have when it comes to using FCC AgExpert.
Yes, absolutely. So first of all, just share just a quick note about what AgExpert is. Our mission is to help the industry digitize their records. So we have two programs, AgExpert Accounting and AgExpert Field, which is a cost of production tool. And what I've learned while working with our product is that it's built to be so simple to use that it actually enables people of all ages to take part in their farm success. So one story I'd like to share is about a few kids I met last year. I think they were about 9 and 11, and they have an Instagram account that you should absolutely send some love to. It's Pete's Prairie Pumpkins, and they have a business right outside of Regina. These two kids are involved in every single step of their farm process. So from planting the pumpkin seeds to fertilizing, harvesting, and then sales as well. So these kids work directly with retailers. They're meeting the people who are selling their product. They're going to farmers markets and talking about the different varieties that they have. And they use AgExpert to track what they're doing on the farm. And when I talked to them last year, I was absolutely blown away by how well they understood business concepts like profitability. AgExpert is really just enabling learning for them because technology is a language that they speak probably better than their parents, honestly. And it's really tying the work that they're doing on the farm, in the field, to what it means for their bottom line. And it doesn't matter that they're as young as 9 years old. They actually get what it means for their business.
Great stuff. I love to hear some of those experiences that some of your clients are having. Let's talk about how the role that FCC AgExpert plays in knowledge transfer amongst the generations on the farm.
Mm-hmm. So a really good example of that is actually another kid that I've worked with over this last year. And that is Maddie from Learning About Ag with Maddie. She is a 5th generation farmer, and she's a grade 5 student currently. And when I met her last year, or actually in January, she was a keynote speaker at Manitoba Ag Days. And her family has been using AgExpert, and they have really used that as a tool to get every generation involved in the farm. So her grandpa, for example, went back and added data about their farm back to 1972. So he knows what was planted, everything that they've done in the farm. And that data is there for Maddie to use and to learn from when she needs to. So she has a YouTube channel where she helps educate other people about what happens on the farm. And in one of her videos, she said, I have a quote from her: "Farming is more than just working in the fields. On our farm, it's a business." So we use programs like AgExpert to help us manage the books, and it's something I really like to help with. So basically, because AgExpert, because AgExpert is so simple, it's just a great opportunity to get the whole family involved and pass on those principles of farm management from one generation to the next. Like Grandpa in this case was so great to be involved in documenting that history for their farm. And then by giving the kids these tools to track what they're doing, they can really clearly see the impact of their work and tie that to the hands-on experience that they have to know what it means for their farm.
One of the other key pieces or features of any really user-friendly software is the ability for users of all, no matter where you are on the technology spectrum, you're able to actually participate in and use it as a tool. So that being user-friendly is just so critical.
Yeah, absolutely. So with AgExpert, you can use it on your computer, your laptop, wherever you are. If you're in the tractor and you're on an iPad or using your phone from the field, it will work on all of those platforms. And there's so many functionalities that are built in to make it easy and seamless for any user. So integrations like our partnerships with Climate Field View or GrainFox, those are features that make it easy for any producer to use the tool and help, arm customers to make better business decisions. That's what we're there for. We're trying to help customers digitize their records, make better business decisions. But the extra benefit that I hadn't seen when I first came into this role was that that functionality and those features really enable this multi-generational impact and what it can mean for families.
Sarah, if somebody wants more information on FCC AgExpert software, where do they find it? Do they talk to their local FCC representative? Do they go to the website? How do you suggest they do it?
The best place to find out more about AgExpert is at agexpert.ca. You can go there if you'd like to learn more. Use that button to book a demo with a product specialist. That will set up a meeting between you and I, or either me or one of my coworkers. And that's just a quick demo to see AgExpert accounting field and what it'll mean for your business.
Great stuff. Sarah, thanks so much for joining us here today, and thanks to FCC for being today's show sponsor.
Thank you so much.
We'll be right back here on RealAg Radio, brought to you today by FCC AgExpert.
At Brett Young, we focus on what's real. It's how we became Canada's largest independent seed company. That's why we're asking a real farmer, what do you think of BY6217TF, Brett Young's TrueFlex Canola Hybrid?
What's that?
BY6217TF, Brett Young's TrueFlex Canola Hybrid with Pod Defender shatter reduction technology and Defender-rated clubroot and blackleg resistance.
Good yield, yeah. Probably choose it again.
Thanks, Chris. Talk to your Brett Young retailer today to see for yourself. Brett Young, distinct by design.
Peter Johnson at WheatPete, RealAgriculture.com. I'm the host of The Word, and I love doing The Word. I love the questions. I love the challenges. I love having to apply agronomics to all over the globe and areas outside of my normal jurisdiction. Also, I love the feedback the most, where growers challenge me, tell me about their plot results, help me to learn. The Word, absolutely the best part of my day.
I was talking to Sarah Boychuk during the commercial break, and one of the points that she never got to in the discussion that we just had was talking about unified vision and communications amongst the farm team. Whether that's owner to team members, whether that's even inside the family unit, so everybody has a grasp and the ability to get on the same page in terms of what some of the economic realities are of the farm operation, good or bad, or neutral, okay, right? So that is another piece of it as well. So please check out AgExpert and what that program has to offer. Encourage you to do so. You could do that by going to agexpert.ca/farm-with-facts. Let's dig in here on the top ag news stories today. Lots to get through. Lots happening around the world, of course. We'll hit on some of the highlights that stood out to me. The federal government and Ontario are committing more than $8 million to support the mental health and wellness of farmers and their families. With this commitment, 3 programs, the Farmer Wellness Initiative, the In the Know program, and the Guardian Network will continue to be available to everyone who needs them. These initiatives are designed to meet the unique mental health needs of farmers and their families and are delivered by the Canadian Mental Health Association, the CMHA, Ontario Division, according to the government. So, very important. Lawrence McCauley, Minister of Agriculture and Agri-Food Canada, says by increasing awareness of the resources that are available, they can provide crucial support to the farming communities when they need it most. Interesting story in the U.S. Now, last week on Real Agriculture, we talked a lot about the funding that Canada we're lagging in the area of climate initiatives related to agriculture in comparison to the EU, to the U.S., to Asia. And that interview is at RealAgriculture.com. I did it with the Arrowell Food Institute and RBC Royal Bank in a new report. I think of that when there is news like this morning. Virginia Tech receives record $80 million grant to fund climate smart agriculture program, paying $100 an acre. Virginia Tech has been awarded an $80 million grant from the USDA to initiate the Alliance to Advance Climate Smart Agriculture, a program aimed at encouraging farmers to adopt climate smart practices that reduce greenhouse gas emissions. So the College of Agriculture and Life Sciences at VTech will distribute over $57 million of the grant to farmers as part of a pilot program to test the feasibility of this initiative on a national scale. The program will initially run for 3 years in Virginia, Arkansas, Minnesota, and North Dakota, with potential to reduce agricultural emissions by 55% and total U.S. emissions by 8% after a decade if expanded nationally. Now, farmers are going to be paid $100 per acre or animal unit for voluntarily implementing climate smart practices, which is expected to improve the environmental outcomes. The program initially will involve 4,500 agricultural operations representing about 500,000 acres. And if scaled up nationally, up to 80% of the agriculture producers could enroll. So there you go, $100 an acre. You can do something with that, even at some of today's prices and things like that. I didn't get an idea as far as what were some of the practices that qualify. That's something we'll dig into maybe for Friday's show when we talk about it. Highly pathogenic avian influenza is rearing its head again as migratory birds head south for the winter. After a quiet summer, the Canadian Food Inspection Agency has confirmed 4 new cases on commercial farms in Alberta and 1 commercial farm in Saskatchewan over the past 4 weeks. There has also been at least 2 confirmed infections in non-commercial birds in Alberta. South of the border, the U.S. has seen its first 2 cases on commercial farms since April in the last week. The U.S. Department of Agriculture says the virus was confirmed on a commercial turkey farm in South Dakota and Utah on October 4th and October 6th. Now, you may be wondering, where are we at with the vaccination of avian influenza? Well, France recently made headlines as the first European Union country to initiate a nationwide vaccination program against avian influenza. Now, according to the EFSA's recommendation, when an outbreak occurs, protective vaccination should be carried out within a 3-kilometer or 19-mile radius of the outbreak's location in high-risk transmission areas. Avian influenza vaccination has been met with reluctance by many countries grappling with the outbreaks, as it can lead to trade restrictions. So that's been one of the reasons that countries have been slow to do this. So currently testing cannot differentiate between vaccinated birds and those infected with the virus. EFSA's role in response to a request from the European Commission is to provide an overview of existing vaccines and various vaccination efforts. Now, here's a question maybe some of you out there know better than I do. Canada's not really in the export business of poultry. I understand why the U.S. would not be vaccinated if they're worried about trade issues, but why is Canada? So Kelvin will probably know the answer to that. We'll maybe ask him on Friday. Movement soars as beef prices drop. Packers have struggled to push wholesale beef prices higher, with Choice anchored near $300 and Select holding near $275. But sharp losses in wholesale prices on Tuesday signaled there's still strong demand under the market on price pullbacks, with choice down 236 and select 135 lower. Packers moved a strong 217 loads of product on the day. This keeping you up to date on what's going on in the beef markets there. As we'll be definitely following up with Ann Wasco on Friday in the beef market update. Now, also, India is mulling a 33% increase in cash support for small farmers ahead of elections. The Indian government is contemplating a plan to boost direct cash support to small farmers by 1/3, potentially increasing the annual direct cash transfer to 8,000 rupees, that's $96, from the current 6,000 rupees. The initiative is seen as an effort by Prime Minister Modi's ruling party to consolidate support from a crucial voting bloc in preparation for upcoming elections. If the proposal is approved, it would cost the government an additional 200 billion rupees, supplementing the 600 billion rupees allocated for the program in the current fiscal year ending in March of 2024. Buying the votes. That's basically the game. You know, no matter the country, it's always interesting how the money starts to flow when there's an election out there. Yes, indeed. Over to Ukraine. Ukraine's commodities resumed direct shipments to European and Asian buyers via the new Black Sea shipping corridor. Ukraine's commodities have resumed their journey to traditional buyers across Europe and Asia through the country's newly established shipping corridor in the Black Sea. Ship tracking data compiled by Bloomberg reveals that 3 ships are currently en route to Spain, while 1 each is bound for the Netherlands, Egypt, and Singapore. Ships that recently departed from Ukraine's Black Sea ports have already reached destinations including Romania, Israel, Italy, and Bulgaria, transporting various cargoes such as grains and metals. This development marks a significant milestone in Ukraine's efforts to reestablish its role as a key supplier of commodities to global markets. It really is amazing to me how they have been able to keep up with the shipments considering all of the things that are happening in the area. Now, speaking of shipping, freight rates continue to tumble as U.S. consumers buy fewer goods. This story was, I believe, from the Wall Street Journal. And it talks about how it has been an anemic peak season for ocean freight haulers as container shipping rates have plunged from pandemic highs and Americans and Europeans continue to pull back on purchases of consumer goods. Daily market prices to move cargo from Asia to the U.S. and Europe in September were down as much as 90% from early 2022. Bad sign for ship operators since voyages are often unprofitable at current rates. Now, the largest container carriers have responded by canceling sailings en masse this year, mainly on the route from ports in China to the U.S. West Coast, according to data from shipping platform Xignina. I believe is how you say that. More cancellations are planned this month following the Golden Week holiday in China, where manufacturing sites are idled, according to box ship executives and brokers. Now, in that story, there was a graph, and I'll tell you, significant kind of declines that we've seen. So ocean freight movement is a key component of global trade, and the slowdown of activity illustrates how large shippers are increasingly cautious about product orders. Container ships move more than 95% of manufactured goods. This is not a good economic sign if you're going to think of this as an indicator, a signal in terms of what's happening there from a global economic standpoint. Probably does free up a little bit more opportunity for commodities to ship if that demand is there. That's the big question, as we heard from Brian Voth of Intellifarm. Not quite sure that demand is going to be there. Also, probably not a great sign that some of the demand is slow for consumer goods, especially the time of the year that we're at. Like, Christmas is here. Companies trying to stock up on inventory and things like that. But man, not too long ago, you could even find a container. And now we got ships cutting back on routes. Similar to airlines, I saw that some of the revenge travel is starting to slow. And I'll tell you, like, some of these airlines have really cut back on routes. If you compare what we had pre-pandemic to now, it's brutal. Anyway, if you have any feedback on today's show, send me an email, shaney@realagriculture.com. Big shout out to AgExpert and Farm Credit Canada for being today's show sponsor. Much appreciated. Make sure you check out AgExpert indeed. I highly encourage you to do so. Thanks everybody for getting real and getting connected with RealAg Radio. We'll chat again tomorrow. Cheers, everybody.
Thank you for downloading this episode of the RealAg Radio podcast, brought to you by Economics. With one-of-a-kind tools, research, and content, Economics is farming's go-to information resource. Find it all on nutrient-economics.com or download the app.